Good morning, Peter.
Good morning.
Shanks are today announcing their preliminary results. Can you tell us what you like about this set of results, but also what disappoints you about them?
What I like about these results is a robust financial performance with group profit up 14% and 3 out of our 4 divisions delivering revenue growth. We've also delivered excellent cash performance with net debt reduced while investing heavily for growth. We've also made good progress on our strategic goals with active management of the portfolio and repositioning the business for growth. What is disappointing is the fact that the markets remain so challenging with lower volumes and intense price pressure. And frankly, those headwinds have eroded some of the gains that we have made through operations and through our structural cost programme.
Can you explain the gap between reported profits, up 14%, as you say, and the flat underlying profits?
Well, for transparency, we're reporting 2 sets of comparative numbers this year to show how we're actively managing the business. Last year, we reported profit of 26.5 million, and today we're announcing profit of 30.2 million, and therefore a 14% uplift in our reported profit. However, much of that improvement is due to the successful sale of our UK solid waste business, which was loss-making and is no longer part of our business. So we're also reporting underlying profit so that we can see the like-for-like performance of our continuing business. And on that basis, profit is flat.
With the Netherlands market so depressed, can you really promise sustainable growth?
Yes, we can, and for 2 main reasons. First, we're delivering growth today even though markets remain depressed. Specifically in the Benelux solid waste business, profits are up for the first time in 5 years through structural cost programmes, commercial effectiveness, and by us actively managing our portfolio. Second, we are investing in other markets where we have competitive advantage, such as hazardous waste and UK municipal, with a total of £250 million worth of projects being built today that will generate both earnings growth and attractive returns going forwards.
You mentioned hazardous and municipal. Can you expand a little more on the prospects of those divisions?
Yes, the prospects for those divisions are very promising because we have technology, scale and positions that mean we're market leaders. In the hazardous waste division, we have exposure to markets, many of which are growing, partly due to legislation, and we're investing here to increase capacity and broaden the range of services that we offer. Our UK municipal business is underpinned by long-term contracts, and as well as improving our existing business, we are currently developing new facilities which will deliver strong earnings, in fact doubling the size of that business over the next 5 years.
Let's move on to organics. Is it performing as you would like?
Well, it's been a disappointing year for organics, with revenue flat but profits down. And the reasons for this are emerging overcapacity in the European organics market, which is leading to significant price pressure, and some operational challenges in Canada. Now, we believe that those conditions will continue for the short term. However, longer term, the prospects for this division are promising, particularly in Canada, where municipalities are increasingly looking to divert waste from landfill, and we're very well placed to support them with that objective through our proven Dutch technology, through the UK municipal experience, and of course using our established footprint in Canada already.
There is some speculation on sector consolidation. Do you expect to be participating in this?
Well, the first thing to recognise that there has been some M&A activity recently. For example, the sale of AVR and Atero in the Netherlands and our own transaction with Biffa here in the UK. Now, I believe that the conditions remain ripe for sector consolidation because of overcapacity and a relatively fragmented supplier base. Now, Shanks not only has a responsibility, but also an opportunity to look at how it might participate in this, and indeed we have a stated strategy to consider bolt-on acquisitions. However, any potential deal would be subject to significant assessment around the company, the market, our own ability to add value, and of course capital discipline to make sure that we generate returns from any purchase price.
Peter, you've been in the job over 2 years now. In fact, when you and I first met. Are the prospects as good now as when you first joined?
Well, I joined Shanks because I thought it was a strong company with good prospects, and that's still very much the case today. Now, although the markets have been far more challenging than I think anyone would have anticipated, Shanks has outperformed the sector, and we are well underway with repositioning the group for growth. We've delivered structural cost programs, actively managed the portfolio, and are investing heavily for future growth. With our clear strategy, I'm confident that we can deliver profitable growth and attractive returns going forwards. So 2 years in, I'm pleased with progress, but I'm also very excited at the prospects ahead.